Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Agenda today, we'll do our regular market update and then I'll pass it over to Shawn. I think he's going to talk about state aid trades and scanners and going into things like that. So, and obviously if you guys have questions, feel free to chime in at any point. I mute everyone, so you have to unmute yourselves if you guys have comments or questions throughout. So, all right, so let's get started. Okay, so from last week, pretty much same across the board. We got state aid for the Russell, SPX and NASDAQ are in 4. So they're both held in there for the past week. We've had the green pie grow from last week. We were technically oversold before, which is below 30% bullish. So now we're technically not oversold anymore. So we're up to about 37% as of yesterday. So we're kind of in that middle range. We're not oversold, we're not overbought. So we'll get into that and then we'll go into each of the indices and evaluate their modeling. So overall, from last week, we were let's see here, Tuesday when we were at 29%, so oversold at that point. So we get over 30%, we're no longer technically oversold based off of that range. It's been a pretty good indicator. If we drop below 30, it's market's done well for bouncing up from those ranges. For the big moves down, we'll see, the bullish get down to like 3% or something like that. So, but for the most part, anytime it gets below there, if it's a regular kind of correction, it'll pop up off those levels once it gets below 30. So that's kind of why we have that, and you can go back in this market pulse and look historically, going back at that 30% range, and I think you'll find it's a pretty good indicator of when things are going to bounce here. So we've had a good bounce. Market's kind of choppy overall. I think the new lows that we talk about all the time. I just kind of like to reiterate, we did that study and I posted in the share drive basically when the new lows popped above 1200. So we had that on January 21st. So, if we go back to that, pretty much every single time it's retested the lows. So within the next 3 months. So just keep that in mind, that basically SPY 431 will be, if history is any indication, it will be retested here in the next couple months. So we're about a month, almost a month out from that low. So we got 2 months left here, as far as the retest, and out of those, I think 6 out of the 7 made new lows. So we can expect more volatility going forward, and probably a retest of that let's just call it 430 on SPY to make it easy. So that's the overall bullish bearish. State 1, state 8. We'll pull that up. All right, so state 8s and 1s. So we go down to 15%, pretty much been climbing steadily since then. we still have the bearish, state eights on top of the ones. So, overall, it's trying to climb out of there. I think, the big thing is, the studies, and I can pull up that it's on the share drive. Let's see here, earnings trades. Let's see here, new low spikes. So that's the document. I would, pull that up and use that as a reference. When those new lows really spike, I think that's the kind of the key thing to keep in mind over the next few months. We did a good job here, going through the state 8 and 1 when those things started, and subsequent months, 3 months or so out, where things were. That's the bullish bearish overall. So if you go through all those, you can see pretty much every single time it's retested the lows or made new lows. A majority of the time it does make new lows after that big spike. So just keep that in mind. I think that's the next few months, especially with the Fed coming up, in a month. The expectation on those, and once again, Sadir sent out that expectations. I think it's the good thing to keep checking on a kind of weekly basis what the expectations were, and it's moved a lot from when we first saw it a couple of weeks ago. I guess my internet's slow here. Before it was pretty much guaranteed a couple of weeks ago to be a 1/4 point hike, and since then it's now 50-50 pretty much between 1/4 and 50% hike. So obviously, a lot of uncertainty going into this Fed meeting. I think they're releasing minutes today, but I'd kind of keep your ear out for this. When any kind of Fed head puts some message out there in the news about what they're going to try and lay out the expectations so there's no surprises at the meetings. I think the big unknown right now is as far as the balance sheet of the Fed. As we know, they're still continuing to buy assets up until the March meeting. So they're still pumping liquidity into the market. And, I think that's going to be the big unknown, at least right now, what they're going to do with the balance sheet. Are they going to do a runoff? Are they going to do something else? I think the expectation right now is they're just going to let assets expire and not re-up, as far as, those different bonds. They'll just let them expire and shrink the balance sheet that way. But we'll see how that is. So, thanks again to Sadir for bringing this to our attention. I found it an invaluable tool here. So let's take a look at the SPX. So we're in state 4, pretty much the average days, we're pretty much right at those. The time it comes in here obviously hasn't followed the typical state 4 pattern, which would be test, the target 1, pull back, down, and then up. So this is a atypical state 4 occurrence. Right now it's kind of fighting at that stop loss level. Goes up, pulls back, provides support there, tries again, and dips below. So really that's kind of the stop losses are showing a pretty good support and resistance level. I think as far as this, typically we're going into a bullish state out of here. I guess it's about 50-50 chance of where it goes out of here. I think the key thing to look for SPX is the 50-day. So we talked about this last week. This, we've been talking for months and months, probably almost a year, plus about the 50-day SMA providing great support on this run up. So now it's dropped below there, actually got below the 200-day SMA. And, so now that 50-day is resistance. And you can see here, it's gotten up in the kind of neighborhood of the 50-day and dramatically turned around. So I think that's the kind of key levels that we want to watch on SPX. If it gets above that 50-day and can close above there and hold above that, that's obviously a very bullish sign for the market. If it has real problems there, you can see the convergence of the 250-day recently here. So anything, if it holds below that 200-day, that's very, very bearish. And if we get a cross of that 50-day, below that 200, that's very bearish also. So I think that's your key level you want to watch here is, these two moving averages, the 50 and the 200 on SPX. So let's pull up Russell real quick here. Russell's still in, state 8. Sorry, it's a little slow here. There we go. So, we hit that the one target, ran into resistance. We always talk about our typical pattern where it runs down, gets into resistance and then pulls off. So obviously not following the exact move. I think it's important that it did run into strong resistance at those stop loss levels. So that would be the key thing to watch here. Let's just call it 2100 on the Russell. If it gets above that, obviously a bullish sign. If not, the longer it stays in 8, I think the more bearish we can talk about things. When as far as the modeling, if things stay in 1 and 8 for a long time, that's very, I guess, good for the trend if it's in 1, and bad if it stays in 8 for a long time. That because those big sustained downward movements, those pretty much only happen in 8. And those big sustained upward movements pretty much only happen in 1. So the longer it's in 8, the kind of more bearish I get on it. I think overall, we got our key levels to watch, SPX, those moving averages, and then I think the Russell, if it can get above that 2100, that obviously be very bullish for the market. And what we talked about, for months here is this channel with the Russell, and the low was 2100. So that lines up kind of perfectly with those stop losses. So you can see it got above there for basically a second, 2105, and then dropped immediately. So if it can get above that 2100, obviously very bullish for the market. Same with the 50-day SMA. If it doesn't get above there and it continues to stay in 8, I think we're looking at what we've studied as far as the market pulse and those new low spikes, retest of the lows, and potentially making new lows in the market. So that's kind of the summary as far as the market. I'll open up to questions and comments. Anyone got anything? Lee, I think you unmuted yourself. I clicked you off by accident.
I didn't have anything. I think you covered it. I think the market is going to retest the lows, and we're going to see a rate hike. So.
Oh yeah, we're definitely looking at a rate hike here, and I think we've shared many stories of inflation. I don't think that's going away. Oil's continued higher. that really drives inflation a lot. The higher oil is, I mean, that just affects some, I mean, there's like 4,000 products alone from, oil, plus, just transportation costs. And I mean, that's gonna, if we get a good spike in oil, that's just gonna, make inflation even worse. And I don't think that's going away. We called their transitory call on inflation, like last summer, we called that BS, and we were right about that. So, I don't think inflation is going anywhere. If anything, I think it's going to get worse here.
Yeah, I agree. And that's why, originally when we looked at the Fed fund forecast tool, it was 94% was a 25% possibility.
Yeah.
And now it's just moving more and more to that 50 basis point hike possibility, right?
Yeah.
And by the way, interesting thing about the Super Bowl, along those lines, did anybody notice how many ads for new electric vehicles were on the Super Bowl? I mean, everybody, if you watch the Super Bowl, and I tape it, and then I go back and watch the ads because I'm usually someplace loud when I'm watching the Super Bowl, right? And a lot of ads for electric vehicles. If you notice them, I mean, at least from different suppliers.
Yeah. No, I didn't notice that. I kind of tune out the commercials, but.
Yeah, well, if you're going to buy a Super Bowl ad, I mean, that's an expensive place to advertise. I mean,
Yeah.
GM had one. Who else? Ford, Hyundai. Can't remember them all. Mercedes.
Yeah.
Mercedes. They all had Super Bowl ads for their latest electric vehicles. All electric.
Interesting.
Well, along those lines, I don't know if I'm getting old, but these were the lamest Super Bowl ads I ever saw. Maybe that's just me.
Yeah. I remember, like, it was probably like 20, 30 years ago. Like, they were like fun. Like, it was like, who had the funniest commercial, right? Now it's just,
Yeah.
What happened to that? Yeah.
What, for me, it wasn't there this year. Maybe other people are more hip than I. But anyway, can we talk about the the SPX for a minute?
Sure.
And where it might retest the lows. Talking about the Fibonacci retracements. When I throw it on, and I actually heard some economic lady say something similar, that she could see it getting down to the 161.8, which is about a 20% off its high of 479.98. And I'm wondering if other people, we've talked on here that the 38, 50, and 61 are real strong Fibonacci numbers, and they're repeated. And somehow I've gotten it in my mind that the 161.8 is also a real strong number. So if it falls below this 61.8, the next real resistance is down at 161. Now, did that make sense, or is that too abstract?
Yeah, no, I think the 61.8 is like a critical level as far as, Joe's not on. He's out of the office today, but he's kind of him and Ashok are the Fibonacci guys. So,
okay.
But I know that, 61.8 is definitely a critical level. And you can see here, I just did, from the Corona low here in March all the way up, if you just look at kind of like a big chart, obviously that 78.6 was support level. I mean, it pretty much touched it and, rocket ship up. So I think, that level, it's hard to see what, that exact level. Let me see here.
Yeah, yeah,
The low 40, let's just call it 4,200.
yeah,
So, I think that's going to be a tough level to get through here, but that would be a retest of the lows. And then if it breaks through there, obviously we're moving down, and it's kind of like 3,800 would be, the next level as far as
Right.
Fibonacci. Yeah.
yeah. So anyway, that's what I think I'm seeing. That's what I think I'm hearing. And just to be clear, the business channels I watch, they have the experts on, and one of them say, oh no, it's going to be great. It's going to be great. The next one says, oh no, it's going to, 20% drop.
Yeah.
So I'm going, what? Anyway, I was just wondering if I could get some confirmation. Thank you.
Yeah, if it does break that 78, I'd expect it to get, test that 61 level, if we do make new lows. So I think we can, based off of our studies of the new low spikes, I think we could pretty much guarantee it's going to try that 78.6 here in the next few months. So, if it does break there, which it does, I think 6 or 7 times out of 8, I would expect it to try and get to that 61.8. So, I mean, I think the big thing just to keep, in the back of our heads here is, the Fed's in a terrible position, like inflation's roaring, 7%, and, they get this huge balance sheet. So they're in a corner with, not much, no upside, no win-win here. It's all lose-lose as far as I'm concerned. They keep the rates low. Inflation will just keep on going. They try and fight inflation. It's gonna be scary for the market. So
Yeah. Hey, let me throw in a quick question, please. I keep
Yep.
reading about China is having all these difficulties in their economy, whether it's the housing, they've suppressed wages for literally decades, and there's getting to be unrest. But the way China works, that could last forever.
right.
Do you see an effect on us if China begins to have more financial difficulties, like with the real estate and what have you?
Yeah, I mean, I've followed the Evergreen, story. It's hard to say. It's such a closed economy, and like, you don't even know if you can trust anything you get, information-wise out of China. So I think that's the problem. It's hard to say. They're not very open.
Right.
So it's hard to make any kind of real analysis on it. But yeah, I've heard that like 2 of the big real estate developers are in serious problems. So
Yeah.
I don't know anything about the wages and things like that. I'm not sure. I haven't heard anything about that.
Seems like
Okay.
the oil guys never have a problem throwing out a comment from China, though, when it starts to drive out the price of gasoline. So, and this is Dave. I wanted to say something about, at least comment about the, you hear, well, it's going to be a great market, and then one day and the next day it's going to be a bear market. Well, yeah, just follow the the trajectory of the invasion news, and look at the last 3 or 4 days in the VIX, and if we're gonna test the lows again, if there's an invasion, that'll be what tests the lows, if you ask me. So
Yeah.
and that may well happen before the Fed moves the rates up. And as far as the rates go, you know, everybody's like going to probably be okay with 25 because they've been talking about it for a while, but 50 might provide a bigger push back up to 30 on the VIX if you get a 50-point rate hike, I'm thinking. So anyway, like you said, there's like not any good news that I see in the pipeline, just pretty much bad news. So beware. I don't know, it's a kind of expensive to buy hedges right now. So
Yeah.
we kind of are where we are.
Yeah, there's a reason it's expensive. So.
I don't know if anybody saw this, but the Fed is meeting right now. They had an emergency meeting starting Monday.
No, I didn't see anything on that.
Yeah. They had a meeting because what was it? The CPI came out and it was at 7.9 and whatever.
Yeah.
And they had an emergency meeting that started on Monday at 11:30. And I'm sure they did it by Zoom. They probably didn't travel there or something, but I can send you a link. I haven't seen any announcements from it, but you know, they were.
The minutes are coming out today. That's all that I heard. I didn't hear about the emergency meeting.
Yeah, we couldn't hear you. I think it was Dave or someone. No, yeah, I didn't hear anything about a meeting, emergency meeting. I think the Fed minutes were getting released today. That's all I heard. But that would be.
I just sent you the link.
Okay. Email?
Yes, to your email.
There we go. Oh, Valentine's Day, huh? Oh, wow. Well, that's interesting. It's funny, I didn't see it, usually something like that would be plastered all over the news, so. Huh. That would be a shock to the market, if they just convened, and, raised the rates here. Not on the chart, as far as that, so very interesting.
Yeah, but they had this because the CPI came out, remember, on Friday, and it was worse. It was higher than.
Yeah.
And so they had this emergency meeting. Now, I don't think you heard much because they just decided not to do anything, right? And until March, but they did have this emergency meeting.
That's weird.
Yeah, and I'm sure it was by Zoom. I don't think they all flew into where they meet in New York or whatever, but they did have a talk.
Well, yeah, I mean, they're definitely painted in a corner here with no good options, so interesting. So thanks. Okay, any other comments, questions?
Hey, Josh, this is Russ. I got some questions regarding the screening and clarification on the earnings.
Okay.
If you can go to your earnings extract where you come up with 7 out of 10 and so forth.
As far as, you mean the calendar?
Well, the screener, you said 3%, 7 out of 10. I think that's under your screener earnings.
Yeah, I think it's called the calendar now. This here? That's what you're talking about?
Yeah, well, you have that other one, which is for, okay, well, I guess that'll work. So my one question is, when you say 7 out of 10 earnings, and it's 100%, is that telling me that 7 out of the past 10 have reached the criteria, correct?
Yeah, so like the search results, so it'll have to go up at least 3%, 15 days prior, 7 out of the last 10. So it has to meet at least 7 out of 10. So it doesn't tell you whether it's 10 out of 10 or 8 out of 10, but it has to meet at least 7 out of 10.
Okay, so the last three could be losers, and they're all the ones
Yeah.
before that could be winners.
Correct.
So it's really 70% win rate.
Minimum, yeah. Yeah, as far as like the percentage move, and then, we go in and, so that's like the actual stock price, and then we go in and test the different strategies that, tell us whether, the bull put or bull call or whatever, how well that performed.
Okay, so when it says 3%, if the stock is $100 and it goes up 3%, that means it's only $103. How does that relate
Yeah.
to a 25% for a bull put or a long call or any other strategy?
Well, I mean, the factors as far as the other strategies, like, there's a lot baked into those, so there, there's IB, and then obviously, the price movement. So, when, you buy a bull put and it goes up 3%, each stock is going to react differently, as far as how much premium is taken off of the strikes and where you buy them and things like that. So it's very complex, individual, it definitely varies individual, by the individual symbol, how much, 3% on Google versus 3% on, Bank of America, so that's why we test, the different strategy, the strategies for different symbols. So, even if they, typically go up 3% or more. So, that's why we have to test them individually. So like this
Okay.
one, like AIG, obviously, does fairly well here, as far as, the long calls, go, whereas it obviously goes up like 3%, 7 out of 10 times, right? But we don't know if it's 8 out of or 9 out of 10, probably 9 out of 10, if you want to guess on it. But obviously, the different strategies are going to have different results. So like if it goes up 3% in 5 days versus 10 days, that's a drastic difference, result for the long call, because time is against you on those. So, it really matters what strategy you're doing. If we're doing the bull puts, time's on your side. So as long as it doesn't drop, you're going to be, making money each day. So any movement up is going to, help that a lot. But the
Okay.
long calls, you got to get it right, and you got to get it right pretty soon.
Okay, so the 3% is the 3% of a particular quarter, correct?
Yeah, so it'll look at the earnings for each quarter and, 15 days out. Okay. This stock has gone up at least 3%, 70% of the time going into earnings, 15 days out.
Okay, now can you go into the earnings analysis page and bring up BlackRock?
Yeah, sure. Yeah. Second, see what the Russell's earnings are. Yeah, come on. Let's see if I can. I think that's gonna freeze because it's indice. BlackRock.
So I was looking at this in comparison to, what we're extracting. You say 3% and 7. So I try to go back to this and say, okay, I should see, 7 items above 3%. But when you're looking at it, I only see 5 above it only,
As far as what?
over 3%.
So you would look at, you'd look at 15 days because that's what we're using for the screener, right? So you'd look at this is the max close above. So it'd have to be over 3% on 7 out of 10, right? So this one's 5.92, it's 12, 10. That one's 3 something, 17, 4.6. That one's 0.91. So out of 10, you have, that one didn't meet it. The rest, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? So you have one here, and then this one, sorry, I'm trying to pull it up. 3.87. So you have 2 out of 10 that didn't make it. That max close, that's the highest in that 15-day window. So you had 8 out of 10 for BlackRock. You got it?
Okay, so it has to be the 15 days with the 15 day.
Yeah, I mean, you can
that's-
change it. You can change this criteria if you want, but that's the one that we use.
Right, okay.
Yeah, and you have to look at the high. So this is where it closed, from 15 days, and the bar is the high percentage that it reached. Does that make sense?
Okay, because I know you've got the different days, you got 5 days, you got 12 days and stuff like that. And then when you try to relate it back to this screener, you try to find something that's close to it to see, okay, does it match? Because I was looking at, like at the bottom one, the 20 days, and,
Yeah,
we've got a lot more that are under the 3.
yeah, as far as like the end result, a lot of the high moves are still up above 3, I think. Yeah, I mean, how it relates, because we basically use this criteria just to find, a good group, and then we test it from 20 days all the way down to 5 to see how well it tests. We go from 20 down to 5. Once we have, a good group, basically, so we're just filtering and filtering to find a good trade. So
How often does this screen get updated? Now, if you go to Gordon Sachs GS, you can see, yeah, here you're seeing it goes up to Q3 21. We don't see a Q3 21.
this one,
Yep,
the Q3 21,
right.
what are you saying?
There is no results. All the other ones had a result.
Yeah, well, it's got the high and low. It doesn't have the little bar.
It doesn't have the bar.
Yeah. I'm not sure. Shawn, can you?
No, and I was gonna say, and we've noticed this on some where they don't even go back that far. They go to like Q, 2, 20, 21, and we're trying to get the IT group to figure out why. We're still getting the data from NASDAQ and from this other third party that pushes it through NASDAQ. So we're trying to kind of clear all this data out for earnings and stuff like that. And I think this might be part of like one of the issues that they're getting for sending us the data. They've been backlogged in sending us data. And we're not sure why. So I know Resham and San Diego are trying to figure that out. And I think this is probably one of it.
Yeah, I haven't seen that before where there's no bar. So
Yeah, I've never seen it like that. I've seen it where it goes back to like Q1 2021 and that's it, You
yeah,
don't have the quarters, but I've never seen it missing a bar like that with the lines, but then missing the bar.
yeah. Well, Shawn will send an email, figure that one out.
Yeah,
IT
yeah,
group.
definitely.
Yeah, I wasn't sure how
And then
often
too-
this, I wasn't sure how often this gets updated. So when I was looking at that one particularly, I thought maybe, there was no earnings results or what.
No,
Yeah,
they update each day. So, I mean, typically you won't see them, change until, the next quarter's reported. But the process goes on a daily basis. So,
So we should be able
Yeah,
to
it
see
should be.
quarter 4/21 of the ones that have already occurred.
yeah, they should.
we
pop
should,
in.
yeah.
Okay.
And I think that's where we're getting some of the problems. Some of the last data that we've got from them is almost 30 days old. So we're trying to get that resolved. And if somebody's reported within that 30 days that we're missing that data from them or those updates, then I think we might be missing them. This should not be one of them. Like this isn't the norm, and this one shouldn't happen either. But I think some of those other ones might be missing too. So we're trying to figure that out.
Yeah, they already reported Q4. So
Yeah, Goldman Sachs did for sure. Yeah.
we'll run it to ground and see how long it takes for. I
And
mean,
then-
it should,
yeah, and
the next day after earnings, it should pop in there. But
Right.
we'll
And then
we'll
And then too,
investigate.
I was gonna say to relate this to like the trades that we do for the bullish pre-runners or whatever, even though like Goldman Sachs here has a couple, they might have that one down quarter for Q1 2021 and then Q3 19, I think if that's included in the 10. But either way, even though the stock price itself might be down based on this screen here, that doesn't mean that the trade itself, like the bull put spread, wasn't profitable. So even though you might see it down, that bull put spread could be profitable. So Goldman Sachs might come up on that earnings bullish pre-runner trade report as like working 100% of the time. So it's not going to match up with these down because you do see the stock was down in the percentage wise, but that doesn't mean that bull put trade might not have worked out, or even a long call. But so you can't really compare the two together like that. I don't know if that's what you were doing, but because I just looked at that report and it's like 100% for the BlackRock, and then that you could see a couple of the quarters the stock price was down after or coming
Right.
into the earnings announcement.
Yeah.
But but the bull put spread could work depending on how you're setting up your strikes, and the
Right.
credit you receive on the trade. So
I mean, as long as it's not a big down, that would
Right,
be good
yeah.
there. But like 0.93 is like nothing.
right.
All right.
So if we wanted to improve our odds, instead of being 7 out of 10, we can make it 8 out of 10 or even 9 out of 10 for those stocks that we want to trade in.
Yeah, I mean, definitely. And that you can even increase the percentage, right? I think Josh had like 3% or 5% there, something like that. You could put 15% if you wanted to. And then obviously, if Josh has a list of 50 at 3%, I don't know what the list is, but let's say it was 50 at 3%, you might only get 5 at 15%, but
Right.
those 5 might be pretty good, right? It just depends on, those stocks and those quarters and stuff like that.
Yeah. I did 3%. I did the lowest that kept Google in it because I know Google's been. So if Google's not on the list, then I'm like, okay. So we've been on 3% for quite a while now, as far as that search criteria.
And I think from my perspective, my thinking was if the stock moves 3%, you know, we should definitely get, you know, about a 20 or 25% move off of a long call. Doesn't mean that's definitely going to happen every time, but that was kind of the initial thinking. Like, if we can get 3 to 5% on the stock, we should be able to get 25% on the option. And that's what we were kind of looking at when we set those trades up initially. And now we've switched over to the bull put, but that's kind of
Now, how do
we come up with that.
you relate the 3% increase to a 25% on a long call or a bull put? I mean, where's the correlate? You know, I'm kind of lost on there.
Yeah, that was just kind of like a vague correlation that we just had in our mind, right? It doesn't mean that it means that exactly. That's just kind of what we were, you know, thinking when we were brainstorming ideas.
No, like I'm like the example, if it was $100 and went up to 103 or 104, to me that's only 3%. But yet, you know, we're selling at 25%. I mean, I don't see how the 3% makes it to a 25%.
Yeah, no, I understand what you're saying, but I mean, you can kind of relate it to. I'm sorry for butting in, Josh, but
No,
you
go
know, you
ahead.
can kind of relate it to the value of the options if you just look at like an option chain and say, hey, if the stock moved up, you know, 3% or $3, how much is the option going to move up if the stock price moves up in $3? Now, you know, obviously it gets a little, like Josh said, complex. If you say it didn't do it in 1 day and maybe it did it in 10 days, then you got to, you know, then the analysis is a little bit different. But I think I've mentioned it before where, you know, if you look at a stock, if you look at an option of a stock, and let's say the option is trading at, you know, $17 and the stock moves up $5, well, if you're looking at a certain strike, you can just move your strike 5 points, and then that should be relative, you know, to the stock moving up $5 if you move your strike $5. And so, you know, you can kind of get an idea of how much is the option value going to move based on that stock price moving. It's not like a perfect, you know, mathematical formula that we're doing there. We're kind of just, like I said, brainstorming some of the ideas. But, you know, I'm looking at a stock right now that the option's at like 16.50. And if the stock goes up $5, now the option's at 19. So that, you know, the option moved up $2.50, right? So $2.50 off of, you know, let's say $16, you know, isn't, you can figure out the percentage that way, right? So you can do it that way. It's not perfect because it's just doing it in one simple scenario. You're not taking implied volatility and you're not taking time value in there either. You're just solely looking at the price of the option chain and the stock price moving up a certain percentage or a certain amount in a day. But like I said, we just kind of vaguely was like, I don't want to speak for Josh, but I said vaguely, if the stock moves up 3%, I should be getting about a 25% move in the option. And that was just a vague analysis that we did at that time, nothing concrete.
Okay. Now, if you bring up CAR, C-A-R.
Avis.
This came up with 90% win rate. But yet when you look at the bars, I mean, you see pretty high.
Yeah, I mean, a couple of them ended down, but I mean, this one went up 17%. You know, within that 15-day period, that one went up, you know, almost 8.5. So pretty, you know, so that's kind of, I think, the confusion. You're just looking at this, that -3 where it ended after 15 days, but during that period, it went up 17% at one point. You know, it went up 10% there. Even that one never went up, so that was a loser. But these ones over here, you know, they all went, I mean, 27%. So, you know, during that 15-day period, a lot of these spiked like drastically, and you could, you know, close it out at that point. Even if it, you know, ended up right before earnings, you know, down. I mean, you look at this range, went from -17 to up 17. So
Yeah, but aren't you looking at the end of day anyways?
yeah, these are end of day closes. So this 3.5 negative, that's right before earnings. So that's after 15 days. But during that period, it went up 17, and at one point it was down 17.
Okay. Yeah, it just makes it kind of confusing when you're looking at this compared to your analysis as far as your extraction of what stocks to choose from. You can't, it's kind of hard to correlate the two.
Yeah. Okay.
Well, Ross, remember that, 90% is still includes a 10%, other side of the coin too. And
Mhm.
when you're looking at that particular stock, Avis is in that particular time period, as a matter of fact, by the way, all the green arrows, if you remember, that's when Hertz decided to, cash in and go, bankrupt for a while. And so the Avis was the only game in town. And so, the pandemic throws everything kind of weirdly off a little bit. So I still, everything you guys do to try to find, and I appreciate all the effort that Delphian is putting in to try to, keep fine tuning this process. But just remember, we're fine tuning it over a unique period in history. So, if we ever do get more back to normal, I think everything that the Delphian has done in all of their screening is only going to get better. But we're still not, not in old as it was territory. We're still kind of coming out of the funk.
Yeah, it's going to be a little while. It's going to get bumpy coming out of the funk too.
So what additional changes do you perceive to make it better, other than what you already done?
I mean, right now, I think, sourcing the data better. So we have more confirmed earnings instead of estimated, but I think that's part of the pandemic. We didn't see this pre-pandemic, anything like this, maybe 20% or something were estimated, but I think, other than that, I don't have anything planned right now. Obviously we're open to suggestions, and, we track these, daily. But obviously, this quarter's not, it's kind of, I don't think it's a typical quarter. Obviously these have done really well over the past few years. I think the last time we had issues was when they raised rates back here. Here, this quarter. That was a bad one. So that's the last bad quarter we had. I mean, even here, the earnings didn't really even start until here, March. That's kind of like the bottom was kind of when the earnings started. So it was pretty much like a lull right here. Very minimal earnings at that point, and then had done well going into that. And then, earnings pretty much kicked off right here. We'll put out the plan in like pretty much a month, March 16th. And then, it's like 2 weeks or, something like that until the earnings really start kicking in. So this was the only, the fall of 18 was really the only bad earnings I've seen. Every other one was good. So I don't think we have plans to change it. Just, if we have one bad quarter every 4 years, that's not bad, right?
Right.
To your point,
Yeah,
the fall of 18 was, the Fed taking action, and in that case, it was somewhat abrupt for the market, right?
Aggressive action.
Right. And,
Yeah.
I mentioned before that what the Fed does supersedes pretty much everything, in my opinion, right? And so right now, the Fed, since the fall of 18, the Fed said we're sitting on the sidelines. So, everything works pretty good because the Fed's not giving the market something to worry about. What are you going to do? What are you going to do? Right.
Right.
And now we're in the situation where the Fed is going to do something, and everyone's saying, well, what is it going to be? Is it 25? Is it 50? Whatever. And there's even some people on TV I hear that they're not going to have a rate hike, which, you know, according to the CME thing
No,
you showed, it is. I just don't see how that is
Right.
a possibility. But, you know, they're talking heads. They're paid to be on TV and talk. So, you know, I think the earnings plan works great when the Fed is settled down and saying, okay, I think we got policy where we want it to be, and we'll leave it alone for a while. And I think that's true of everything, all fundamental analysis, all technical analysis. Everything works when the Fed is kind of happy with their policy and sitting on the sideline. And when they aren't, then, you know, that is just a quarter you have to be careful with.
Yeah.
That's my opinion. This is just, and there's nothing else that you guys at Delphian can do. You can't stop the Fed from, you know, taking action, right? And that's just something that traders have to be cognizant of, and you know, be more careful when the Fed's acting that way.
yeah, yeah. And I think to that point, you know, I think we're gonna have to, I'll go through and try and do an analysis on, you know, the rate hikes. You know, I keep telling the 2.5 for the 10-year. I still can't find that document, but I think that's the key level, you know, and that's something I got years ago and I saved it. Some mutual fund when I was a broker back in the days. I was like, wow, this is really good. So the 2.5 on the 10 years, like the critical level of when things get ugly for the stocks. So it'd be funny to point out when they got the 2.5 back here, you know. But I'll do a little more analysis on this rate hike stuff back here, and, you know, maybe some historical stuff too. So. All right, Shawn, ate into your time here. Yeah, we can go a little long, I guess, but
yeah, mine can be pretty brief, and we can kind of reconvene back next week and talk about it. So really, you know, what I wanted to show, or I'll make sure share my screen real quick and make sure I do this. So what I wanted to mention is, you know, and back to the earnings stuff. Yeah, like Josh said, I should be sharing my screen pretty soon, I think. Hold on, my computer's running really slow. Maybe. It says Zoom not responding. You might be able to see my screen in a second. Let's see. Is it just blank?
it's black right now. It said you're
Black,
sharing.
right? Yeah. Let's see. All right,
There
you
you
can
go.
do that now, right?
Got
Okay,
it.
cool. But what I wanted to mention, yeah, is we really don't have much of a plan to change, you know, the earnings, in my opinion, right? I mean, we changed it to the bull put spreads and some different strategies like that. I still think a lot of them, you know, over time, you know, just consistently work, and I think they give us a good basis of, you know, trades that we might want to do. We still have a lot, right? We still have like 138 trades for a quarter, which is still a lot of trades when you're just basing your trades off of earnings. But, you know, in my opinion, you know, I think that's why this group is so great, because, you know, we put out this stuff using Delphian, so you guys can check it out and see some trades, get some good trade ideas in our opinion. But, you know, I always, you know, hope that, you know, anybody on the call, if you see what we're doing and then you come up with a better idea, you know, share it, or, you know, back test it, look at it. And then if it does work better, please share it, you know. So if you're looking at, instead of 3%, you're looking at, you know, 15%, and you're looking at it, you know, 9 out of 10 earnings, and you find some trades in there that seem to work really good, you know, those trades might be inclusive on the list that we already have, but instead of having 70 symbols, maybe you have 3. And then, you know, the way I'm thinking is, if you find something like that, I mean, if it works really good, you might not want to share it, and that's, you know, your personal opinion, and I can't argue with that. But if it's something that you can share with us, you know, we would love to see it, because, you know, I definitely know that I haven't found, you know, the best way to do all these trades. And, you know, I'm trying to put ideas out there and hopefully spark, you know, everybody else's ideas to see if we can find some good stuff within Delphian. Because, you know, I do that, you know, if I'm driving to the gym, or if I'm driving to cheerleading for my daughters or whatever, you know, I sit there and I think, and I'm like, oh, this might be a great trade idea. Let me back test it. And I write it down and I come home and back test it. And if it stinks, then obviously I'm not going to tell anybody. But if it's good, you know, I want to share it and say, hey, Josh, check this out. See if you see something wrong with it. And if there's not, then, you know, typically we share it with the group as a whole. So, you know, that's just what I would hope everybody else does as well. So what I wanted to mention real quick is obviously, you know, Josh has the market overview and talking about, you know, the market possibly testing, you know, some of these lows that we tried, you know, a couple of weeks back or a month back or whatever. But I just want to make sure we're using, you know, the screener that we have within Delphian. So we do have this awesome screener with all this different data points that you can kind of put together. And Ashok had mentioned a couple of weeks ago talking about, you know, state modeling stocks that are in, you know, state model state 8, you know, current state 8, and then even stocks that have, you know, a grade, like a fundamental grade. So current growth grade A, let's just say over 90. So you can come in here and put all these different cool little screeners together, current stocks in state 8, current grade A over 90. If I hit find stocks using this liquid options list, you can see there's 23 different symbols that come up. So this kind of just gives you a way to, you know, if you're confused or if you're just uncertain of what to do, you know, maybe look at stocks that are in state 8 and then grade A, like Ashok had mentioned, and kind of do some further analysis on these stocks. You know, you can also do current, you know, state 8, and then you can also do another, say, well, let's look at a stock that's in state 8, but it hasn't met its, you know, stop loss target yet. So that means it's going down, but it hasn't rebounded and come back up yet. And then let's look at that and say, okay, well, now how many stocks out of that 23 have met that criteria? Now we're looking at 19. So we took away, you know, 4 symbols. So you can kind of run some really cool analysis this way, find some good stocks that, you know, you might want to go in there and take a deeper look at, stocks that you might want to buy, either, you know, long stock or stocks you might want to, you know, buy and sell some calls, or maybe sell, you know, a bear call spread or sell a bull put spread or whatever. Just a bunch of different strategies that you can use depending on your thoughts, you know, on maybe where this market is going. Now, these are stocks that Ashok talked about as possibly being bullish stocks, or at least somewhat, you know, not really bearish, if you will, but being able to hold some of these lower levels because they are in that grade A. So these might be some good buying opportunities. But if you want to look at stocks that are going down, and if the market does continue to possibly test some lows, maybe you would want some stocks that are going down and you could sell some, you know, bear call spreads. So there's always just some cool analysis you can do. Obviously, if I have this stock list, I can click add to stock list, and it'll add these 19 stocks to whatever stock list I want to call it. I did one earlier, and I started using this option screener. So you can always, you know, create a stock list, come into options, go into the options screener like we have here, and you can import that stock list into this option screener. And based on the strategy that you think you might want to use, you can select the strategy, select the screener that you're talking about with the strategy, input that stock list. If you click on this little arrow, click on your stock list here. I did one earlier, which was like a state 8, and then it had to be in grade A, and then like it had to have a 5% to maybe a 50% drop over the past 20 days. So I was basically looking for stocks that had fallen, you know, pretty decently over the, you know, short term, and then, but there's still a grade A stock. I don't know why it says 8. I typed that in, so I probably just typed in 8 instead of typing in A. But, you know, and then you can come in and just get trade ideas. Say, okay, well, I want to use that stock list, but maybe I want to basically sell, you know, some bear call spreads. You know, what would be a good trade to do based on that particular stock? And then, you know, again, you could click on this, you know, screening tool here to run all this analysis based on, you know, the portfolio size and the amount of risk that you want and the trade setup. But you can see this just puts out some really good output for you. Now, none of this information here has necessarily been back tested, because really we're just taking a screener to find a stock list. Then we're taking the stock list to import into this option screener that's just then giving us trades based on the different little, you know, rules for the trade that we have set up. So it's not back testing it. But if you do find some good stocks here, obviously then you could take this ASML and then go and back test it if you wanted to back test it using some other criteria as well. So I know that's pretty quick, but I really just wanted to make sure that you guys are looking at this, because this is something I look at. If I hear a Shook or if I hear Josh or somebody talking about something, I try to run that screener. And then once I find those symbols, I'm like, okay, cool. What will be some good strategies, for me to maybe employ on those different stocks? And then this basically does that output for me. It tells me, what my max risk on the trade is, what my profit potential is. It breaks it down to even tell me my break even on the trade. So this, option screener tool here just shows you so much great information and gives you some really good trade ideas to possibly move forward, depending on your outlook in the market. So I showed it pretty quick, but if anybody has any questions now, please let me know. And then what I'll try to do is next week we can take a little more time next week and kind of dig into this a little bit further. But anybody have any questions on creating the stock list, using the screener, or even this option screener tool?
I do have a question related to this. One of the things Ashok mentioned was, that it was mentioned that there was a paper on the I rebound and I reverse indicators in collaboration. And when we were talking about the state 8, looking at the grades, and I didn't find that. I looked for it after that.
Yeah.
And is that shared to everyone, or maybe it's called something I didn't recognize?
I would think so, but I've had a problem in the past trying to find some of that too. So what I'll try to do is find some of it, and I'll send you the breadcrumbs, if you will, or the way to access it. I mean, we should have the documents as well somewhere, and I should be able to share those with you too. So
I didn't find it. It was mentioned in that there was a paper on those things, but I didn't see what was being referred to. After the call, I went and looked for it.
Yeah, I'll have to go in there and try to find some, because we're trying to use that collaboration tool. I mean, we've had it in there for a while, so we've been trying to use it. But like you said, finding some of the stuff in there sometimes is a little difficult. And even some of the other stuff, I had to have Josh, send me some of the information, because I couldn't find it either on those, on like the iHedge, I think, or the iTrend. So I'll look to see what I have, and Josh can do the same, and then we'll make sure and get it over to you. And once we get it over to you, possibly in the email, or if he puts it in that shared folder would probably be the best idea that we have. And then put it in that shared folder, and then we'll try to come in here and add it to this collaboration tool after we do that, if that works for you.
Yeah, that'd be great.
Yeah,
Okay. We'll have to.
I looked in the shared, all the ones that I shared, but it wasn't in there.
Yeah.
So I have to get it from Ashok. The Prezi that he did, for like the I low, I'll have to go in and find that. Yeah, it wasn't in that collaboration right now. So I'll have to go in and get his Prezi and find where it is. So I'll try and do that.
Yeah, if you could, I'm interested in looking at it.
Yeah.
Yeah.
Yeah, because I've had people ask about it too, and I was like, I can't find the documentation on how it was designed. And I remember he gave a presentation on it, I think in Tampa, and sometimes he thinks he shared the documents with us, but he didn't. So then we have to go back and get them from him. So we'll get that for you. So sorry about that.
Yeah, I'll have to try and dive in there and find where he put it.
Yeah, and then you can see too on the screen real quick, as I'm kind of pushing through and doing these different, changing my portfolio size and changing my risk. Obviously, even with my stock list that I have, it's given me no symbols met that criteria. So, if you get that, you just want to make sure you're, I typically start at a wide range with my screener, and then I kind of narrow it down. So you might have to do that. This stock list here, this one that I created, is kind of small. Stock list. Let's see how big it is. I think it might be like, so it's only, the stock list that I use there is only 1, 2, 3, 4, 5, about 10 symbols. So it's not that big, but you can see, I looked at ones that had dropped, more than 5%. You can see some pretty decent names here. Facebook, I didn't know Facebook dropped as much as it did. I just pulled that up before we got on the call. I think it went from like 320 to 214 or something like that. But then you can see some company, Facebook, FedEx, First Solar, Intel, Moderna, I'm not too sure about, and Zoom, I'm not too sure about. But you can see some pretty decent names there that have taken a pretty big hit that, obviously are grade A and could have a pretty decent rebound, or just might push a little sideways if the market does sell off. Are these companies still going to take another 10% drawdown, or are they just going to somewhat run down to sideways? But always something just to kind of look at and give you some ideas, if you're looking for ideas. So, any other questions? All right. And again, I know I went through that quick, but from now until next week, if anybody has any questions or anything that they're curious about, please, you can obviously email me, or wait till next week and we'll get on there and I'll go through this a little bit more detail and show you some guys, or show you some some of the other symbols and things like that and how to use that screener. I think that's it, Josh. I appreciate it, everybody.
Okay. Yeah, thanks. I'll try and find that very Sadir. So,
Okay, thank you.
might take a while. All right.
No hurry.
Well, thank you, everyone, and we'll see you next week.
All right, thank you. Good meeting.
All right, thank you.
All right.